for those of you who have never met this Mwalimu, I'm so sure some of you have never met me here. My name is Dr. Aura, yeah, and I teach all papers at RCM College. So I'll put on my video just once like that, and then when we proceed, you'll not get a chance of seeing this Mwalimu again. Yeah, so that is it. All right. Yeah, we are looking at W limited. We are looking at W limited. W limited. Not why matatizo. No. May 2019. May 2019. It's like you guys haven't yet gotten this. May 2019. May 2019. Question number 3A. Have you now gotten the question? Please confirm. Have you now gotten the question? Please confirm. Have they gotten the question now? Please confirm. Please confirm. Let me just put on there. Have they gotten the question? Please confirm. I want to continue now very fast. They're not talking here. May 2019. May 2019. Hello? W limited, yeah. W limited is what we want to do now. W limited. Thank you so much. So let's then proceed. IS 19. So I'm making that assumption that all of us have gotten to, at least we have an idea of what employee benefits are. So IS 19. IAS 19. Thank you, and welcome to the session. So we are told here, W Limited, a public limited company, operates a defined benefit pension plan for its employees. So it's defined benefit pension plan. The present value of the future benefit obligations as at the beginning of the year was 3080. So we have here obligation brought forward is 3080. Yeah. And the fair value of the plan assets as at the same date was 2860. So assets brought forward were 2860. So you can see here they are separating. They're separating. In this case here, the obligation from the very assets here. They're not giving us net obligation. Very, very good. Now, my very good students, they're telling us there that further information relating to the pension plan or the year ended 31st December was as follows. I can see the current service cost for the current year, benefits paid to former employees. I can see contributions paid into the plan, present value of benefit obligation as of that date, and then fair value of plan as of that date. That's the end of the year. Additional information, interest cost, gross yield on blue chip corporate bonds is at 5%. On 1st January 2018, the pension plan was amended to provide enhanced benefits with effect from that date. The present value of the enhanced benefits as at 1st January 2018 was calculated by actuaries at 110 million. Required, they want us to give them the required notes, the statement of comprehensive income and the statement of financial position to reflect the financial effects of the defined benefit pension plan in the year ended 31st December 2018. So right away, I will be able to get all the marks, ladies and gentlemen, in this very question without even knowing. Sorry, a little bit. Just a minute, there's something I have to sort here. I need to come here and do something here to the host tools. Under participants, I want to deny them the possibility of them ever starting their videos and ever starting their microphones. It's very bad, and that only happens when you are teaching the CPA students that they are not able to know how to mute themselves. Now I wish we shall be able to reach that level where every student is able to mute themselves, so that now we shall be, getting into discussions there. Because currently when I'm muzzling all of you from speaking, simply because we cannot be able to mute ourselves, it's very, very sad. Very sad. Very sad. But what to do? That is it. That is how it is. Ladies and gentlemen, first of all, we shall start with our workings here. And we start with the P&L workings. And for this particular one, because it's quite a heavy standard, we normally have acronyms or mnemonics. So for example, for the P&L acronym, we normally use the principle of SIP. You SIP. All right? So SIP in this case stands for what here? We have here the service cost. Service cost. So service cost, the first one is the current. So like in this particular case, have they given us the current service cost really? Are you able to see the current service cost, please? Yeah, if you look at the table given up there, you're able to see the current service cost is 20209. The I stands for interest. And because here they are giving us assets and obligations by the side, you must come and do a working for them. So give us the interest on assets, for example, beginning assets at the beginning of the period. So they've given us blue chip rate of interest which I'll be able to borrow, which is 5%. Is there somebody who is able to see the assets that were brought forward? Assets brought forward. I can see 28 what is there? 2860. So then, ladies and gentlemen, is there somebody who can easily give me this figure over here? Is there anybody who can easily give me this figure over here? Anybody who can easily give me this figure? So remember, all the figures are being given by yourselves. So the interest on assets is 143. And then we have interest on the plan obligations. So you can see plan obligations brought forward from the very beginning paragraph there. We have a plan obligation brought forward, 3080. However, there was a review of past service which led to an increase or enhanced past service liability. If you look at the third paragraph, additional information note 2, we are told at the beginning of the 2018 beginning of the year. The pension plan was amended to provide enhanced benefits. See, these enhanced benefits to the employees to us is a liability. So it was amended at the beginning of the year, to provide enhanced benefit with effect from that date. The present value of the enhanced benefits as at 1st January 2018 was calculated by actuaries at 110. See, this is an obligation on our side which existed at the beginning of the year. Remember, this is 1st January 2018 at the beginning of the year. So it has to be included together with this opening obligation there. When it is done at the end of the year, like if it was done on 31st December 2018, then automatically I would not have introduced this 110 there. So can somebody give me this 5% of 3080 plus 110 and ensure that you know how to use your brackets very well. So I'm being given a figure of 159 point what here? 159.5. Here I want the net interest. Net interest. You take the interest of the obligation, of course, this will always be higher, minus the interest of the plan asset. Remember, always it is OR. OR is obligation minus asset. So whenever you get an opportunity of getting a net, it has to be OR. Obligation minus asset. So then we have here 159.5 minus 143, which students are giving me a figure of what here, 16.5. So I've taken care of S, I've taken care of I. Now I need to take care of P. P stands for past service cost. Is there somebody who is able to remember that the past service cost was 110? That is come and add, and whatever you shall get, you shall give as a pension what year expense. So this is what we shall be able to take to our extracted profit and loss account. Remember, if there were any curtailment losses will be treated as what year? Past service cost. Is there somebody who knows what curtailment expenses are? Curtailment means what year reduction, Yeah. So for example, last year, we thought, we cannot continue having these employees, all of these employees at RCM. So what do? We sacked like 60 of them. See, by sacking, you'll be forced to pay them their benefits. So then you must do what we call re-evaluation. You must evaluate your obligation status at that time. In most of the cases, it will lead to a loss because for employees to accept a golden handshake, they would want more. So if it was if we had any curtailment losses, I would have brought them here. But then there is nothing like curtailment losses. I simply want you to give me this total, ladies and gentlemen. How much do we have there? Somebody please add for me these three. $335 point something. 235.5. Thank you so much. Thank you so much. Now, with your permission, ladies and gentlemen, I will now be able to go to the OR thing. So once I've done the working for the income statement, now I will straight away go to the financial position. And the financial position, you shall always start with the obligation. Obligation. You shall always start with obligation. And then you go to assets. So obligations, ladies and gentlemen, basically what you're supposed to do is to remember this, open, SIP benefits, and close. Very important. Open, SIP benefits, and close. So if you're trying to steal some drink, your mother's drink at home, you open the bottle, you sip the benefits. Don't finish everything. She'll know. You sip benefits, and then you close the bottle very nicely. Very nicely. For obligation, if you remember this, you'll never go wrong. Never go wrong. So for obligation, ladies and gentlemen, so we have here opening obligation. Opening obligation. So opening obligation. Are you able to see the opening obligation somewhere there? It is 3080. Opening obligation given from the first statement. So I can talk of that 3190 when I add 110, but I can treat that 110 separately. Yeah? So opening obligation. So then we have S. S is the service cost, the current one. How much do we have there from the table given? From the table given, are you able to see the current service cost? Is there somebody who can assist that student with the question? May 2019 question 3A, it's important. So 209, I'm being given 209. Then come here and give me the interest. Remember that now this is interest on obligation alone, eh? Interest on obligation. Interest on obligation, which will be 5% of this 3080 plus 110. Remember, this is not net interest because I'm not putting assets here. It is just interest on the obligation, which gives us 159.5. 159.5. I've taken care of this interest. And then I have, in this case, the past service cost. The past service cost is the 110. Yeah. Past service cost is 110. And then I remember we paid benefits. So when we pay benefits, the obligation of the fund goes down. The obligation will go down. So is there somebody from that table who is able to see the benefits that were paid? Anybody who is able to see the benefits that were paid? 242. This will be a deduction. This will be a deduction. So remember, it is open SIP. Yeah. Then you get the benefits, then you close. So come and give us here closing obligation. So closing obligation. How much is the closing obligation given? I hope you are able to see the closing obligation from somewhere there. 3360. Opening is positive, closing is negative. Yeah, so please come and give me the net. Now this will be a remeasurement. Gain or loss. The actual gain or loss. So I'm being given a figure of 43.3. So only John was giving me that figure. Is it 0.5? John is correcting his own figure. How about the other students? Is it 43.5 for all of us? Now, is it positive or negative? Is it positive or negative? Negative, eh? Negative. So when it is negative, it means that really the closing obligation is big. The closing obligation is bigger than we expect. That's why it's negative. So when the closing obligation is bigger, that puts us in a worse off situation. So this becomes a remeasurement what here? Loss. this becomes a remeasurement loss. Don't put negative, you simply call it a remeasurement loss. If it was positive, then automatically would have said, hi, our obligation has reduced. It would have been a gain. Now these are remeasurement what here? Loss. So remember, first I started with the P and L. Now I've been able to do the obligation. Now I'm going ahead now to do the asset. I'm going ahead to do the asset. So please give us the assets. So assets, we normally use in this case here the concept of what here? ICC benefits. We know that there are people really who benefited because of ICC here. ICC benefits. But remember, you must have opening and what here? Closing. You must have opening and closing. Opening and closing. So we start with opening assets. So are you able to see the opening assets, ladies and gentlemen? I'm not feeling you guys. You guys are not really doing your very best to support Mwalimu, and the way I want to support you, I'm here to support you. Are you able to see the opening assets? It's only John 28:60. And then now this I will be interest. Interest on assets. We're using 5%. Assets, in most cases, there will be no adjustment for this opening. Simply take 5% of 28:60. Yeah, which in this case, I'm told, gives me 143. 143. Then, ladies and gentlemen, in this case here, we have our contributions. We have our contributions. Contributions. Are you able to see how much was contributed? Are you able to see how much was contributed to the plan? So, of course, this grew our benefits, 259. This is not a benefit, but it grew our assets. It grew our assets like that, 259. All right. And then, ladies and gentlemen, this other C is irrelevant. We only put it there to remind you, ICC. ICC. So after contributions, please give me the B, the benefits paid. Benefits paid. When we pay benefits, our assets in the plan go down. They go down. So then are you able to see these benefits which were paid? Somebody there? I'm alone, but I will overcome. I'm alone, but I will overcome. 200 like that. All right. And then give us, ladies and gentlemen, our closing what here? Our closing assets. Closing plan assets. Are you able to see them somewhere? Closing plan assets. I'm being told they're 3113. So of course this will be deducted. So please go ahead and give me this difference. And the difference will either be a remeasurement gain or loss. Thanks, Krinji. Will either be a remeasurement gain or loss. So John Owalo is giving me a negative 93. So you don't write negative, Yeah. So will this be a remeasurement gain or a loss given it's negative? Will it be a remeasurement gain or a remeasurement loss? Thank you so much. You guys are geniuses. You're geniuses because it means that the closing assets are way above, isn't it? Because we interpret this in the opposite way. The assets are way higher. The closing assets are way higher. So then that means automatically that we have gained asset-wise. So this is a remeasurement gain. So once you get the two, please go ahead and give us, ladies and gentlemen, go ahead and give us the OCI. The OCI value in terms of remeasurement. In terms of remeasurement. All right. So we have in this case here, the first one was a remeasurement loss. So that is minus 43.5. And then we have a remeasurement gain of 93. So whatever value we shall get, in this case, it will be an OCI gain. OCI gain. Remember, negative now will be, loss will be negative, gain will be positive. So then we have an OCI gain, because it's positive generally, which will give us what figure, ladies and gentlemen? Which will give us 49 point what here? So this 49.5, 49.5. And then you have finished the entire question, ladies and gentlemen. You have finished now the entire question. Now what you need to do, if you want to do it, is simply to come and give us there a summary. If you want to do it. Want to do it, you can come here and give us a summary. So you can come here and give us a summary in terms of financial statements extracts. All right. Okay, Elizabeth. Also here we're looking at what we call other comprehensive incomes. Other comprehensive incomes. So we have statement. We have in this case here the description, or basically the item, and the shillings there, the millions. So the first statement is the P&L. The name of the item will be pension expense, which you did, which gave us what figure? Somebody, pension expense, if you can remember. Pension expense, what figure do we have there? Pension expense, what figure do we have here? 335.5. That is the end of that. Then we have another extract in the name of what here? Other comprehensive incomes, remeasurement gain, remeasurement gain of how much? 49.5. And then lastly, ladies and gentlemen, we have our statement of financial position. We talk of net pension liability, which is our O minus A. So if you go up here, you go to see that our closing obligation was 33, this one here, 3360. Minus our assets, closing assets 3113, which then will end up giving us what figures and gentlemen? 247. If you do it that way, you'll end up getting all the marks. You end up getting all the marks. So have you gained something out of this short session? Have you gained something out of this short session? Have you gotten something out of this short session? Great. So we are going to build up momentum for these classes. We shall be able to build momentum for these classes. So please go ahead and practice more. Yeah. So when again do you want us to do this? Or ingine moja. Okay, sawa. Utafanya hata mbili tena. Okay, sawa. I hold on a bit on the assets. So OCI stands for other comprehensive incomes. Those incomes which are not available for distribution to members as dividends. For example, you have your assets like PPE appreciating in value. If you put that through profit and loss, the members would want money as dividends at the end of the year. So you need to know how to hide that in OCI like that. So remember, it is not all questions that come like this. IS 19 questions is not all questions that come like this. So do you want me to look for another different type of a question which can come here? Do you want me to do that? Do you want me to do that? Yeah, with net obligation, that's very, very good. With net obligation, that is very, very good. Actually, what I will do, I will look at a very different one. In this context, let me just look for one here. Yeah, this one of Saruji Limited. It was quite simple, but confused the students. December 2023, question number 1C. December 2023. Let me know once you guys are able to get that question, please. Let me know once you guys are able to get that question, please. Got it? At least there is somebody who has been able to get it. You know, Wako seems to get these things very fast. Mariko has gotten it. Thank you so much. CM has gotten it. Thank you so much. So this is quite different, and this is really popular. We are told Saruji Limited operates a defined benefit scheme which has a net obligation. It has a net obligation. It has a net obligation. I love the concept of net obligations because when they talk of net obligation and we happen to be having a benefit, then these benefits will not be appearing in my statements, because the benefit will reduce the obligation and they also reduce assets at the same time. Please listen and listen to me very well. I explain something whenever we have this. Yeah. So maybe you have an obligation of 100. And then you have assets of say 80. And then in the period, you pay the benefits of what year? Of 20. Benefits of 20. So if you are looking at net obligation here. So remember net obligation, it will be O minus what year? Assets. Yeah, it will be O minus assets. Obligation minus assets. So the O here is 100 minus assets of what year? 80. All right, so 100 minus 80 gives me 20. All right. But if, for example, you're looking at this thing now independently, you'll say, hey, but we paid benefits of 20. If we paid benefits of 20, then our obligation must have reduced. Our liability to our members must have reduced. So in this case here, then the net obligation individually, it will be our 100 minus 20, giving me 80. And then assets as well went down because you see, the benefit you paid there 20 is a cash withdrawal. And asset went down here. So in this case, it will be 80 minus 20, giving me 60. So if you use this, at the end of the day, your net obligation, we should not have used these words, eh? This can really confuse. Net obligation means assets minus what here? So obligation less benefit is 80. Assets less benefit is 60. The net obligation would have been this 80 minus this 60, which would still have given us 20 like that. So whenever you have a question that they are defining using the terminology net obligations, the benefits become irrelevant. Benefits shall not be using benefits at all. We shall not be using benefits at all. And you'll be able to understand when I do this question of Saruji Limited. We are told Saruji Limited operates a defined benefit scheme, which had what here? A net obligation of 120 million as at 31st December 2021. The following details relate to the client or to the scheme for the financial year ended 31st December 2022. All right. So required, recommend to the directors of Sanji Limited the correct accounting treatment of the above transactions in the financial statements for the year ended that date, including financial statement extracts in accordance with Afr-Ias 19, employee who benefit. This is an examiner who is wishing me success. This is a question that everybody can get, even at times without attending anybody's class. So long as you remember the acronyms. Start always with the P and L acronym. So when we call it mnemonic, it means memory aid, eh? Memory aid. So remember this one, you simply use what we call the SIP. What we call the SIP. So under the SIP here, give me the service cost. So remember the first one is current, for the current period. So how much is the SIP there, ladies and gentlemen? Are they able to give me the SIP here, ladies and gentlemen? 55. Go ahead and give me the interest. So now remember always this is net, and we are lucky because the net is provided. Because the net is provided. Because the net, we're so lucky. We're so lucky, you know. Because the net is provided. So now the question will be, have they given me the rate of interest, these ninjas? Have they given me the rate of interest, ladies and gentlemen? What is the rate of interest here? 5%. Yeah, so then I will take 5% of the net obligation. Obligation. 5% of the net obligation given at the beginning there. Are you able to see that net obligation, ladies and gentlemen? Oh, yeah. Are they able to see the net obligation? I suppose yes. I suppose yes. Question is disappearing, but I'm getting it in a minute. This system at times, they are not the very best, but we shall overcome. All right, I have it here now. So it is 5%, ladies and gentlemen, of the net obligation of 120. So 5% of 120. So these one near ninjas gave you how much? I'm being given 6. I'm being given 6. You see, these are free marks, right? Indeed, these are free marks. Apart from that, I can see benefits paid. I will run away from benefits paid like crazily because these are net obligation thing, isn't it? The net obligation thing. All right. Then I can see here we have this P for the SIP. So P is past service cost, which heavenly we are not given, not trick at all. But you see now we have, ladies and gentlemen, something that so many students can easily forget there. we have in this case here a net loss on curtailment. This is a P&L, even if it's not in the acronym, loss on curtailment. So loss on curtailment, how much do we have there? 11. Then we have a remeasurement gain there. This examiner was very, very gracious. I'll not need to look for it, but that cannot go to the P&L. Remeasurement gains, those ones automatically will go to OCI. So that is it. So give me the pension expense here. Give me the pension expenses and gentlemen here. Please add for me. They're giving me a figure of what here? They're giving me a figure of 72. Thank you so much. You're really great students. Really great students. So 72. Then now we can straight away go to the extracted. Extracted. OCI, other comprehensive incomes, of which I can see a measurement gain. The measurement gain of how much? Nine, isn't it? The measurement gain of 9. That is really easy. That is really easy. So now, ladies and gentlemen, we shall be looking at what we call what here? Our closing net liability. To go in this case here to our extracted statement of financial position. So now we are looking for the closing net obligation, which is not given here because of the nature of the question. It's not given here because of the nature of the question. So here you have to be very, very bright to get it. Not very bright, but I mean, yeah, the closing net liability, you have to really think about this very, very well. All right. So then what do we have here? How do we get this? How do we get this? How do we get this? So you will always start with the opening net obligation. Opening net obligation. So the opening net obligation, we had a figure of how much here, somebody? Opening net obligation, we had a figure of how much here, somebody? Oh, they're not talking to me now. They're not talking to me now. 120, that's the opening net obligation. So remember, this obligation will be increasing with our current year's pension expense. So you add pension expense, the SIP thing, which gave us what here, somebody? The SIP thing gave us 72. Give us 72. All right. So remember here, we don't bring any benefit. But if there are contributions, they will reduce our net obligation. Contribution. Yeah, remember we talk of employer's contribution. When the examiner tries to bring employee contribution, that never affects our scheme liability. It is what the employer is able to contribute. So anybody who is able to see the contributions to the scheme, I'm being told 100. So this reduces, because you see, when we say net obligation, it is obligation minus assets. And you see now ourselves, when we contribute to the plan assets increase. And you see these plan assets you're subtracting. That is why the contribution has to be subtracted. That is why this has to be subtracted. And then now remember, the very last thing here will be the remeasurement gain. Remeasurement gain. So remeasurement gain, you guys are given me a figure of 9. And because it's a 9, you know, we are reducing our liability because our assets are going up. We are reducing our net obligation because our assets are going up. So then in this case, ladies and gentlemen, what do we have here at the end of the day as our net pension liability? So remember, you start with the opening obligation, which will grow with the current year's pension expense. Yeah, very, very important. Yeah, if you make any contribution, it reduces. And then the remeasurement gain, like that. So then how much do we have here? I'm being told it is 83. 83. So then you can now come here and give us a summary. You can come here and give us a summary of extracts, financial statement extracts. So you start with the P&L. The P&L, the term to use, it will be pension expense. Pension expense. The pension expense is 200 what here? Pension expense, let me just check. Not 200, sorry. The pension expense was 72, sorry. 72. Yeah. And then we have in this case here OCI, other comprehensive incomes. Never forget that. We have remeasurement gain. Remeasurement gain of how much here? Remeasurement gain of 9, eh? Remeasurement gain of 9. And then in the statement of financial position, we shall talk of net pension liability. So always a net. It's very hard for you to make bigger assets than liabilities in any pension scheme, which in this case here, the net pension liability is this 83, and got there like that. If you do it that way, then you will be done. Would you want us to do another question? Would you want us to do another question, or should we say that is it? All right. You want us to finish the entire financial reporting today, one day, within a day? You want us to finish all these questions here within one day? Yeah. Urembo Limited. Urembo Limited. Let's search for this Urembo Limited. So Urembo Limited, remember these pension scheme questions, maximum number of minutes you should take maximum, if you're right. It should be 10 minutes. 10 minutes should be through. So is there somebody who is able to get that question of Urembo Limited? Anybody who is able to get Urembo Limited? Anybody who is able to get Urembo Limited? Urembo Limited. You can search if you have them online to give you. Then I'm able to give you. We don't have it. If you don't have it, August 2025, eh? The same Walimu, that is August 2025. Let me just check. August 2025, question number 5. August 2025. Yeah, you're right. It is August. Question number 5. Yeah, so this one here, you start with the requirement, They're 12 free marks. They're free marks 100%. Recommend the correct accounting treatment for the above transactions to the directors of Urembo Limited in the financial statements for the year ended 31st December 2024, including financial statement extract in accordance with RCM 19. 12 marks for this kind of a question. They are joking. They don't know that we are advanced students, advanced level students. We are advanced level students and we want tough questions. You want tough questions. We want very tough questions. We are not a joke. We are not pushovers. We are not pushovers. We are strong students who have been able to study in one of the very best colleges, that is RCM College. So I want to see who will be able to give me this total expense, total pension expense. I can see students are laughing there. It's like they are not sure that they are really tough. It's like they are not sure that they are really, really tough. This examiner is good, yes. This examiner is good. Actually, the very best for you, if you are to ask me, only the students of CP don't like it that way, you should be able to appoint me to assist you in revision. Yeah, so that I be your group leader, discussion leader, where I simply come, give a question, and then I'm silent. I wait for workings to come. I mark live here. I bring up topical discussion topics. Yeah, and then we shall be able to overcome. Like CM is giving me 216. Sale is also giving me, I told you, these are the type of questions that this examiner should be giving us at this level. So I told you. So is there anybody who wants me to do part one? Is there anybody who wants me to do part one, or all of us are safe? You can see everybody's getting 216. Everybody is now getting 216. I do part one alone. So remember, it is P and L. P and L, what do we think about? Sip. Depending on what you like sipping, that those of, I don't know whether there's somebody who sips some alcohol a little bit, but P and L is sip, always. You start current one. The current one there I can see it is from the table given, 165. Then I have interest as per the I. That will be 5% of the opening net obligation of 360, which gave you guys what here. I don't have a calculator with me. 18, 18. Thank you so much. Yeah. And then we have SIP. Of course, this other P stands for past. Zero, not given. But I can see there is a loss on curtailment. But we sacked some people last year, which took us to a loss position. That automatically has to be taken to the P&L. That loss has to be shared with the members. So curtailment loss, how much are we talking about there? 33. The net pension expense will be 216. That is very, very important. Now then I would want you to give me other comprehensive incomes, OCI. In most of the cases, this will be just a one-liner because it's already given. It's already given. So OCI, I'm being told 27, but you must mention there, it is a remeasurement gain. $27. Thank you so much. Now from there, lastly, you must give us the closing net obligation, which I would want to hear from you. I give you like 3 minutes. Give this to me. They're getting 249. You can see most of them. They're telling me, Mwalimu, this one we are so sure. Don't even do it. This one we know, all of us, we know. This one, Mwalimu, we know, don't do it. Mwalimu, this one we know, don't do it. So is that what everybody is telling me? Is that what everybody is telling me, really? Is that what everybody is telling me, really? Everybody is a fast learner. Look at this ninja now here. It's a ninja who is doubting themselves. They're saying, Mwalimu, don't listen to the fast learners. I want everybody here to be a fast learner. Do you know why? Because you see, first I've done the first question. I've done the first question. So then I expect, and the first question that I did was exactly matching this. So I expected everybody now to be able to do it. However, we just go ahead and do it. The closing net obligation. The closing net obligation. So we have here our opening net obligation 360. I hope this is correct. All right. Then in this case here, we're going to add pension expense. We got 216. There were some contributions paid. 300. There was a remeasurement gain. A remeasurement gain of how much here? Because it's a gain, and we are talking of obligations. A gain and obligations, it has to be what here? A negative, right? You're subtracting. You're subtracting. If you do it that way, then you will be able to get, in this case here, the closing at obligation. Of how much? Can someone remind me? 49. Thank you so much. There is a student who has given us a question here of April 2022. April 2022. Question number 3. April 2022. Question number 3. April 2022. Question number 3. I love pension quite a lot because currently I audit several pension schemes in Kenya. For example, I'm the internal audit, internal audit actually of the University of Nairobi pension scheme. So these are things that we do practically. That's why I was able to come up with these shortcuts of doing this, because I realized it's quite a fluid standard. If you're not careful, it can really put you out. Have they gotten this question? Have they gotten this question, ladies and gentlemen? April 2022, question number 3B. Thank you so much. April 2022. We just write it here. That's question number 3B. So we have April here. Yeah, question number 3B. So you're told the following accounting information was extracted from the financial records of Kibo Limited regarding the defined retirement benefit scheme for its employees. You can see the net defined obligation as of that date, net defined benefit obligation. Yeah. They've given me obligation at the beginning, obligation at the end. So even that lengthy method of getting obligation at the end already has been done for me. Current service cost, contributions to the scheme, benefits paid by trustees. And because, of course, this is net obligation question, the benefits paid by trustees are irrelevant in this question. They're irrelevant because it's net obligation question. The market yield on the high quality corporate bonds is at 5%. Assume there are no tax implications regarding the retirement benefit. With suitable calculations, explain the accounting treatment of the various elements of the defined benefit scheme on the financial statements of Kibo Limited for the year ended 31st December 2021 in accordance with International Accounting Standard number 19, employee benefits. When they tell you to explain, don't start saying that this will be done. No. Give us financial statement extracts done following the concepts of what here? The concepts of IAS 19 standard. That is what was expected of us here. Remember, IAS 19 is very, very clear on you doing the pension expense, P&L, giving us the OCI, remeasurement gain, remeasurement loss, and you giving us what should go to the balance sheet. So I'll give you exactly 3 minutes to try tackling this question, and then we get to discuss. Basically, we are getting here the P and L, pension expense. Then what do we have here? Abracadabra. Tiboya, I'm waiting to be given a figure by yourselves. Lenovo is saying 292.5. I hope this time around everybody's doing it. Thank you, M. I hope this time around everybody's doing it. There is nobody who is waiting for Mwalimu to provide any answers, really. This time around, including the Sheila, those have already shown you how to do it. After all, remember, I'm coming in as a discussions leader. I'm just a group discussion leader, the group leader. I'm not coming here to do everything for you. Or you want me to be doing everything for you? Would you want me to be doing everything for you? No, it's not to be fun. It's not to be fun. Once Mwalimu does like one question, then I should be able to allow you to do the others. I can see M already has something there. Now, my very, very good students, please listen and listen to me very well. Listen and listen to me very well. We know it is SIP. Yeah, current service cost, interest and past service cost. So we start with current service cost. For this question, the current service cost is 200. Then we have net interest cost. The net interest cost will be 5% of the opening balance, which was 1850. Could you kindly give me this figure? Anybody who can give me this figure? And 2.5, right? Yeah. And then past service cost, nothing. No curtailment loss, nothing. So basically come and add the two, which will give us the net pension expense. This one now you write very well. Perhaps in AFR, it is the only question that you know. You must decorate it. Bad language, Mwalimu shall overcome. We can't be having this as the only question we know, Mwalimu. No, we shall be having knowledge to cover everything. So we'll give us 1 point. And then, ladies and gentlemen, from there, I will be able to go straight away to the next thing here, where basically, you see now here, they have given me the remeasurement thing. So no much workings really, because I can see here, yeah. So we have here net benefit at the beginning, obligation, at the end, current service cost, contribution to the scheme given, benefits paid, yeah. The market yield on a high corporate bonds is at the rate of 5%. Assume there are no tax implications regarding the retirement. Great, I've seen it. I would want to remain silent a little bit to see whether somebody will be able to give me the next thing to do, because already I've seen it. One, the remeasurement laws have not been given. Very beautiful examiner, nice examiner, nice examiner. I'll be able to get it pretty fast. Is there somebody who knows how to get this? Just check what you guys are telling me. Yes, iPhone, I love that. The closing net obligation, Pauline, this time around, you are wrong because this has been given, unless you want to just check it out. John has already 82.5. 82.5. Ladies and gentlemen, remember here, they have given me the closing, yeah, net obligation has been given. Net obligation is given. What I was told by the person who taught me long time ago, if this is given, then the remeasurement gain. Remeasurement gain or loss won't be given, won't be given. You must look for it. You must look for it. And it's very easy for us to look for this, ladies and gentlemen. What do we do? This is what we shall do. So I will come and look for this net obligation closing. Very easy. So I start with opening. The opening net obligation. Opening net obligation. Are you able to remember that 1850 year? Are you able to remember that 1850? Yes. And then we come and add pension expense. The one you got above of 292 point what year? 292.5. If you look at this very well, we have contributions to the scheme. So less contribution to the scheme. How much are you able to see there as contributions to the scheme? How much are you able to see there as contributions to the scheme? Yeah, 225. When we do contribute, like if it's RCM, which has a pension scheme, when we do the contributions, then our scheme assets go up. When they go up, it reduces the net obligation. So this has to be subtracted. I don't think there is really any other thing apart from now the closing net obligation, which will be given, which is given in this case. The closing net obligation given there is how much, ladies and gentlemen? To give us the remeasurement gain or loss. You take 50 plus this, minus 2000, give me a figure, minus 2000, give me a figure, 82.5, negative or positive? Negative or positive? Negative or positive? So I'm told it's 82.5, 82.5, and the figure is supposed to be who? 82.5 negative, Negative. I love this because when it is negative, and remember these are net obligation, it's a net liability. Negative means that we are worse off. Our closing obligation is higher. When the closing obligation is higher, it negates everything. So then that must be a remeasurement what here? Loss like that. 82.5. Like that. Yes. Yes. So we have a remeasurement loss. And then of course now once you have now everything, go ahead and give us what here? Our extracts, ladies and gentlemen. Now we have everything. So go ahead and give us our FS. Give us our FS extracts. Give us our FS extracts. So you have here P and L. So P and L, we shall call it pension expense. Pension expense, which is 292.5. Then we have OCI, other comprehensive incomes. We shall call it a remeasurement loss, what the old time used to call actuarial valuations, 82.5. And then we have statement of financial position, which in this case is a net defined pension liability, or benefit liability, which happens to be 2,000. If you do it that way, out of the marks given, assuming the examiner has given you 10 marks, you'll end up getting 11 out of 10. 11 out of 10. All right. So then that is it. I would want to see you again on next Sunday. So next Sunday, we shall start a bit early. But I would want you to tell me which other standard is quite technical that you would want me to do. Next Sunday, which standard would you want me to handle next Sunday? In advance, I need to know it for me to see whether I will appear or I bring in a guest speaker. Income tax, deferred tax, I'm so good at it. I represent clients at KRA, so I know when KRA is pushing companies to pay, immediately I tell them, no, this is deferred taxes and leases. Inflation. So can we do Sunday from 7 a.m.? We do Sunday from 7. You know, there are 3 key standards if you happen to, 3 key areas. So we have this pension is very, very important. You have financial instruments, like the one that came last semester. Very, very important. IS 12 deferred taxes or income taxes, very, very important. Yeah. Then we have leases. Leases are also very, very important. Yes. Very important. Even IFRS 2, share-based, came last semester, and so many students were not able to interpret. It came last semester. All right. All right. All right. All right. So, the gentlemen, we shall discuss about those other things. So, this particular revision class will be for free for students who are studying at RCM. The students who are doing their self-studies or they are in other colleges, then we shall be able to know a price to charge them, because you can see she's really nice. I'm here to help you. So I need to compensate Mwalimu for his time, right? Thank you so much. Be blessed big time. Or somebody saying Mwalimu, they're helpful. Great. We shall overcome. Not on weekdays. The weekday classes attendance was so poor. Let's just settle at 11. The 11 one, I'm so sure this one on Sunday will be able to benefit so many of us, because you see, we will go for early morning service, chat service, and then we come for this one at 11. I think that is really a good compromise. And if you're not able, of course, to then come in at 11, we shall be able to have this on the learning management. We shall be able to introduce our learning management system, yes. Because we want to pass, remember RCM now, we want to have a house of 1-term passes, 100%. We don't want to leave even a single student out. We'll be able to pass. So if we put this together with Mwalimu, I'm 100%, I'm coming to complement what he's doing. I'm 100% shall be able to rescue everybody. All right. We shall overcome, yes. That is really very, very important slogan. Thank you so much. Bye-bye. And of course, anybody who would want to join us, our number is 0793 555 000. 0793 555 000. Bye.